Mia, you've been covering Alibaba for years. Tom suggests there will be sweat in the room as they pitch the company to investors. What's your take?
Well, I disagree, because I think that all the questions that investors are going to be asking, pretty much Jack Ma is going to have a canned answer to that, which is there are going to be risks when you decide to invest with us.
They're going to take the boilerplate
that you're going
approach.
to be taking. But think about it. The questions that they're going to be asking those investors in any of these big swanky hotels are going to be pretty basic. We all know them. We can come up with the top 5 questions. The first one is what Adam was talking to, which was the fact that there is a governance structure which puts all the power with the top 30 people. Number one. Number two, the VIE you were talking about, which is the variable interest equity entity, which essentially says that you can have access to the profits that's owned by the Cayman Islands, which owns Alibaba, but you won't have access to the ownership. Those are things that, yeah, but everyone knows that already. So Jack Ma is going to do what he does best, which is, hey, listen, there are risks associated with it. And one surprising thing, if you take a look at the latest filing from Friday, was this. This is a 4-page letter within the 400-plus document.
What was the surprise inside it?
The surprise in here was that he said very clearly that when he looks at the overall top 3 constituents, which is number 1, customers, number 2, employees, and number 3, shareholders, he will look at shareholders as number 3, but that he is going to be very much willing to focus on the shareholders as well.
Scarlett, I wonder what Fidelity or Wellington,
the big institutional investors, might ask.
Of Los Angeles are going to ask about.
Well, you mentioned Jack Ma a lot, Mia. Is Jack Ma's tight grip on the company a selling point, or is it a stumbling block?
No, that's a good question. And ultimately, of course, investors are going to have to make their own decision. I would say that it's an asset. He's not too dissimilar from the Steve Jobs of the world, the Mark Zuckerbergs of the world, where he is at the helm of this company that has done a lot. No one's saying this company is going straight to the moon.
No, could you continue? John Sculley, let me bring you in here on Straight to the Moon. That brings up, shameless plug, folks. John Sculley, the book is not out yet.
But we have a copy.
It's called Moonshot. It's the first copy I've got here. Steve Jobs said to me, no, it doesn't say it there, but we're looking forward to Moonshot, John Sculley. But the moonshot here is it's just about Jack Ma, isn't it? Can you run a public company in America just about one guy?
Well, it is interesting that they were turned down by the Hong Kong Stock Exchange to go public there over exactly the issues that Mia was just talking about, that there are issues about accounting and there are issues about control of the insiders in terms of shareholder vote. But I think Alibaba is really interesting when you start to look at what it can mean from the standpoint of how does it compete with Amazon, how does it compete with a lot of the companies that are over here trying to move into China.
What happened the day they were turned down in Hong Kong? Were you in Hong Kong?
I was in Hong Kong. I covered that.
What happened that day?
Well, of course, you have many people who are part of the Hong Kong Exchange and the Monetary Authority who said, hey, Hong Kong should have changed the rules to allow what could be the biggest e-commerce platform globally. But many people say, hey, look, it is a big concern because of the governance. You could argue that perhaps New York was so desperate to get this that they pretty much allowed for this to happen. But it's not too dissimilar from other U.S. companies.
Will institutional China, in that strange linkage of government to private, will they pony up for public shares of Alibaba?
It's an interesting question. I'd say most already have one. Have some access
they got
to
private
the company. They have private preferred shares, of course. That was another interesting piece that happened through the filing on Friday. So we got a sense of who's actually going to be selling shares, and there were some Chinese companies that.
What surprised you in that report?
That SoftBank is not going to be selling. They are the largest shareholder, and they have 34% stake, some $50 billion.
And
they're not going to. They're holding on to it.
John, here's my question. I mean, you were the CEO of PepsiCo. You were the CEO of Apple. You've founded 11 companies, on and on. You know the mindset of institutional investors better than anyone. Do they have to buy what is effectively going to be the largest IPO in history just because they have to be there?
I think they do, because this is just too big a company not to have some investment in. And I think that it's going to be a company that has reach into so many other businesses. They call it the circle of trust in China, but there's a whole network of relationships of other investments that Jack Ma has made investments in, and in many cases he's the controlling entity in it.
All right, coming back, we're going to continue to discuss this. This is obviously getting everyone worked up. Tom,
this
especially.
This is a terrible book.
No,
I threw the stapler at Steve Jobs. He ducked it, hit Wozniak in the head.
All right, John Sculley, our guest for that hour. Mia Saini, we'll be right back.